Good morning and welcome to the Killik & Co market update. It's been a big week for markets. Obviously the US election was the main event, but we've also had interest rate cuts from the Bank of England and the Federal Reserve. Starting with the US election, there were a couple of surprises here. Firstly, how quickly the result was announced, and secondly, how far ahead Trump was. Given how close the polls had been in the run-up to the election, many people expected several days of vote recounts before finding out who the new president would be. We have seen some significant moves in the market since the result was announced. Some of the biggest share price moves have been in banks and renewables. On the day of the result, shares in JP Morgan and Goldman Sachs rose 11.5% and 13.1% respectively, and that's due to hopes that Trump will favour tax cuts and deregulation as he did in his last presidency. Renewables, on the other hand, had a bad day, with shares in NextEra and First Solar dropping 5.3% and 10.1%. Trump favours fossil fuels over renewables, and it's thought that he will not continue with the tax breaks that Biden gave to renewable companies via the Inflation Reduction Act. Many of Trump's policies are expected to be inflationary, for example the tariffs and the plan to reduce immigration, which would reduce the labour force and push up wages. Because of this, we saw a fall in US government bond prices and a rise in yields. This suggests an expectation that interest rates will need to remain at higher levels to keep inflation under control. The prospect of fewer interest rate cuts has caused the dollar to strengthen this week. US equity markets have performed well overall since the result. The green line on this chart here is the S&P 500 over the last 6 months, and you can see that notable jump this week. However, some other global markets have not responded well to the prospect of another Trump presidency. The pink line on here shows the Euro Stocks Index, which has weakened recently. Trump has talked about imposing tariffs on exports from Europe, for example on cars and luxury goods. And there is also the question mark over Ukraine. If the US stops sending support, will Europe have to contribute more? And finally, on the subject of the impact on other countries, we've seen a weakening of the Mexican peso and the Chinese yuan. Both countries export a lot to the US, and the prospect of tariffs is a negative one for them. A change has been announced to the Dow Jones Industrial Average this week. While some indices, like the S&P 500 for example, will choose their constituents based purely on market capitalization, the Dow Jones has a committee that actively chooses which stocks the Dow Jones should be tracking. Every now and again, a change will be made to the 30 stocks to make sure they are adequately reflecting the US economy. Most recently, Intel has been removed and Nvidia has been added. Both companies are involved in semiconductors, but Intel has been very slow to make the more advanced chips that are needed for artificial intelligence, whereas Nvidia has excelled in this area. This is the second change of 2024. Back in February, Walgreens was removed and Amazon was added, and the change before then was all the way back in 2020. Historically, the Dow Jones has been a bit light on technology in comparison to the S&P 500, and that has influenced its performance. On here we have the two indices over 5 years, the S&P 500 in the green and the Dow Jones in the pink. You can see the S&P 500 outperformed in 2021 when technology was doing very well. The gap then closed a bit in 2022 when technology underperformed, and the S&P 500 has moved ahead again more recently due to that rise in artificial intelligence stocks. So it's a good reminder of the importance of picking a suitable benchmark. And finally, just a reminder that the COP29 climate conference is due to start in Azerbaijan on Monday. Azerbaijan is heavily dependent on fossil fuel exports, and sadly some executives from the country have already been filmed trying to use the conference to broker new oil and gas deals. The election of Donald Trump is also likely to have an impact on the mood of the conference, given that during his last presidency, Trump pulled the US out of the Paris Agreement. The focus of the conference this year is on financing. How much should developed economies be paying to developing economies to compensate them for climate change that's resulted from use of fossil fuels? It's sure to be an interesting discussion, so we'll be keeping an eye on that over the course of the next week. Moving on to have a look at next week's calendar, we are expecting results out from AstraZeneca, Spotify and Disney. That's it from us. Have a great weekend, and we'll see you next Friday.